So what I think for people to do is have two things in your head. One is put some of your capital in the long-term trend and just let it play out. Then you can try and see if you can add alpha versus that trend by trading. I guarantee you won't. That's the hard thing to realize. The trend is, like in crypto, is so powerful that it even becomes difficult to start a business if you've got any capital because the returns are so high. We've never had this before. It's the easiest and best way to kind of unfuck your future is having a mega trend behind you. Most other things we trade are cyclical. Whether it's the dollar or rates or equities, different. Technology, definitely not. It's a secular uptrend because tomorrow's more digital than today. So focus on part of your portfolio, the largest part, should be in capturing these long-term trends. They're easy. You don't need to do anything. But I know people like to trade. It makes them feel good, gives them some adrenaline. So do that with a smaller amount and then write down whether your returns are actually beating your benchmark. Chances are they won't.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge.
In this video, Raoul Pal will talk about how 99% of traders will be replaced by AI. Let's catch him up to know more.
That's a really important thing that anybody who's been around for a while knows. It's a probability game. All you're trying to do is shift probabilities in your favor. So when I talk about a long-term trend, well, the probability of it going up tomorrow versus today is higher, which is much better than if you're trading a short-term chart, which could be moving around. So your probability goes up. That's all it is. And you have to understand that the probability of trading is, most of the best traders in a shorter term time horizon will be at best 50-something%. So that means most of the time you're going to feel like a moron. And that's okay as long as you understand why. Some trades just don't work, Just because the probability is 80% in your favor, it can still fall the other way. But if you're making mistakes because you don't know what you're doing, you don't know why you're doing it, you're not reading the charts right, you're not stepping in stop losses right, or however you're doing your trading methodology, if you're not learning from that, then you're destined to fail. But as you say, if you get into a trade, your first trade, you do it big, you get 3 or 4 winners, you don't realize the probabilities are still that you're going to have some losers. And if you then start putting your ego into the trade, it's the whole behavioral aspect of trading that's really hard.
Bitcoin's once celebrated Uptober has taken a gloomy turn, with the leading cryptocurrency struggling to regain its bullish shine. Despite briefly surging to new all-time highs, early in the month, Bitcoin has since fallen into a narrow trading range between $107,000 and $111,500. At current levels, it remains about 2.3% below its October opening price, sparking fears of the first red October since 2018. According to CoinGlass data, the average October gain since 2013 has been around 20%, meaning Bitcoin would need to push past $130,000 to match historical performance. Instead, the market risks logging its worst October in 12 years if it closes the month just 4% lower. The contrast with past bull cycles is striking. Both 2017 and 2021 saw October gains of at least 40%. Network economist Timothy Peterson notes that while the bulk of Bitcoin's yearly performance often occurs in the latter half of October, time is running short for a rebound. Hopes now rest on the upcoming Federal Reserve meeting, where speculation about ending quantitative tightening or lowering interest rates could provide a last-minute lifeline for Bitcoin and the broader crypto market.
So the idea that I've had in my mind is my job is to live in the future. That's what macro guys do. And I got to a point because of AI and robotics that I can't see beyond about 2030, 2032. And that's unusual for me because I use mega trends as the backdrop to what I look at, things like demographics. So when you look at demographics, the population is aging pretty much in every major developed country in the world. So that means that economic growth slows as people get older. So GDP growth is driven by population growth, productivity growth, and debt growth. So as population ages, you get these big mega trends that start affecting growth rates of things, and we offset it versus debt. So we've got these mega trends. We've been debasing currency, printing money to kind of offset this massive debt because of the aging population that's slowing growth, and the governments try and keep growth up by creating debt. But soon we're going to replace that equation because the population side is going to be replaced by AI and robots. So we can have infinite number of productive units population in the next 10 years. So what does that do to economic growth? Who does it accrue to? But we get even weirder outcomes than that is, obviously people like, what job am I going to do? What's the point of a trader when you've got an AGI that can do it better? What edge do you ever have? How do companies get priced in markets once you've got this super intelligence? Because don't forget, for the first time in all of history, we will not be the super being on the planet. Somebody will be much smarter than us. It'll be the AI. So it's going to be better at us at all of these mental tasks that we do, and faster than us. So it becomes a strange world where I don't think trading works. I don't know what investing is like. We don't know what jobs we're going to do. But we're going to have massive economic growth. And I do know that we're very adaptive as a species. We'll figure stuff. And we'll figure stuff in ways of making money, ways of being human, and stuff like that. But we don't know what that is. If I know that we're about to go through the largest change humanity has ever gone through in the shortest period of time, i.e. not being the apex of all intelligence, it's a mind-blowing concept. And you can create infinite amounts of these super brains or super bodies. It's like the only way to really prepare for that is to not care. And the only way to not care really is to have made enough money that your security, you allow yourself to be secure, and then you can enter that world because you can take risks, you can learn, do different things. But if you're expecting to be doing what you're doing today in 10 years' time, you're so wrong. And so really I've looked at this and said, okay, we've got these massive megatrends, crypto, technology. They go up over time. They're the fastest, crypto particularly is the fastest growing asset in terms of performance in all human history in the shortest period of time. So don't fuck this up. Take that opportunity and use it, because if not, you're going to regret it. So I always talk a bit about your future self, and will your future self thank you for what you do today? You're trying to set your future self up to be protected from the new world that comes.
Bitcoin is treading water ahead of Friday's crucial US CPI release, trading tightly between $107,000 and $111,000 as traders brace for volatility. The inflation data due at 12:30 p.m. UTC could reshape market sentiment and dictate Bitcoin's next move. Consensus expectations call for a 0.4% rise in headline CPI and 0.3% in core prices, leaving little room for surprise. But in crypto markets, small deviations often spark big reactions. GPT's pre-CPI playbook is all about survival and precision. The AI model suggests cutting leverage before the release, as CPI events often cause liquidity to vanish within seconds, leaving even skilled traders exposed to sudden slippage. For those unwilling to sit out, using short-dated put options spanning 1 to 7 days could offer protection against whipsaw moves. The key, ChatGPT emphasizes, is to reassess only after the initial volatility subsides and the market's direction becomes clear. Once the number drops, traders should expect chaos. A hotter CPI could strengthen the dollar and pressure Bitcoin lower, while a cooler reading might fuel a rebound if yields retreat. Still, the overall inflation rate near 3% means the higher-for-longer narrative remains intact. With sentiment fragile, the most strategic move is balance. Trim risk, hedge smartly, and let the data guide your next trade rather than trying to predict it. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoinzilla for daily news, all for free. That's all for today's video. Until next time.